Hello, everyone. Greetings to all joining. I'm Prashant Rana, the Senior Product Manager for e-commerce integrations at Avalara. I hope you have been finding the conference enlightening so far. Navigating through the complexities of e-commerce landscape has always been intriguing and challenging in equal measure. The digital world's interplay with our daily routines and businesses is undeniable and ever evolving. Today, we are going to delve into some transformative trends, discuss the momentum of e-commerce, and try to decode the intricacies of taxes and compliance in this space. So, e-commerce. It was a term once synonymous with convenience and luxury, but now it has become an economic linchpin and a necessity. Let's unpack the recent moments and trends that have defined its ascent. The pandemic, as we all witnessed, brought unprecedented change. Streets, once bustling, became eerily quiet. To adapt, businesses and consumers shifted online, accelerating digital adoption. This was an impressive jump, with the global online trade surging from 14% to 17%. Regions such as Latin America and Africa also actively drove this digital wave, experiencing significant growth. And here's an important note: governments worldwide, while supporting these businesses, are also keenly observing these trends. Their aim to understand and potentially harness this growth in e-commerce. Let's talk about Gen Z. They are not just avid users, but also influencers. Engaging with platforms such as TikTok and Instagram daily, they spend upwards of 5 hours a day online. Short videos have become the new marketing mantra, catalyzing brand awareness and sales. Platforms like TikTok are driving such narratives with hashtags like TikTok made me buy this, garnering over 4.6 billion views in 2022 alone. And understanding this in association with the financial muscle that Gen Z wields is also important. Gen Z constitutes a whopping 40% of global consumers, wielding an annual spending power of $200 billion. Extend that influence on the sway over parental spending, and we are talking about an astounding $3 trillion a year. Gen Z is leading this charge and taking this growth from where the pandemic left us. Moving on, in today's age, the ease of purchase is paramount. BNPL is leading this change, turning regular retail purchases into interest-free installments. BNPL is not just an acronym anymore. It's become a day-to-day convenience item. And who is driving this shift the most? Gen Z and millennials, of course. By 2026, they are expected to dominate the BNPL user base. And what's more, some insights: clothing tops the BNPL shopping list with 63.9%. Most purchases, though they hover around $100 to $200, but when we look at the bigger picture, the US BNPL lending is gearing up to reach a staggering $90 billion by 2023. And globally, we are talking about a value that is going to breach the $150 billion mark. Buy now, pay later is now fast becoming a favored method of consumers, primarily the younger demographics. Another catalyst to e-commerce is the hybrid approach of buying online and picking up in store or warehouse, the industry term, BOPIS. So again, this was a trend that started during the pandemic and seems to be here to stay. Digital convenience and in-store immediacy converge at BOPIS. US shoppers seem to agree, pouring $95 billion via this method. And this isn't just a US phenomenon. Globally, BOPIS is a $240 billion plus industry. And consumers have spoken. It is clear. BOPIS is enhancing the shopping experience, with over 70% customers acknowledging its impact and also saying that it enhances the shopping experience. The plus side for merchants, sometimes these shoppers also make additional purchases in store, leading to higher sales. And retailers are also listening. Over half of them in the US now offer BOPIS. To look back a little and add context, pre-pandemic, only 4% of large US retailers even considered curbside pickup. Now, not only is BOPIS representing 9% of all e-commerce sales in 2022, but it is also growing at a robust 19% per year. However, this is where the tax applicability challenges start to creep in, with customers billed in one tax jurisdiction, but possibly picking up the goods in another. But overall, BOPIS does provide online product research convenience, in-store pickup, no shipping costs, and also inventory visibility for merchants. Now, let's move on to how this e-commerce trend is being tapped into through new fees and surcharges to be considered in the US. All this growth and subsequent changes, such as increased usage of vehicles for frequent delivery, population shift to smaller communities from urban areas, and the like, is leading to states reconsidering fee structures around retail delivery. The intent? Finding alternative sources of revenue, especially with the changes in the motor vehicle fuel tax collection distribution. But good news first, exempt items continue to remain exempt, but nuances exist. For instance, the size of a business could dictate fee exemptions. And then add to that the various compliance challenges with different jurisdictions setting different unique rules around collection and filing of such fees. As those complexities mount, platforms like Avalara can provide invaluable guidance, ensuring seamless compliance. Let's dive deeper into the fees that have been applied or are soon to be applied. Colorado, it's been in the tip of the merchant's tongue for quite a while now. Starting from July 1, 2022, the state of Colorado introduced a new stipulation of the retail delivery fee. This fee is applicable to deliveries encompassing at least one taxable item, and this could be anything: electronics, furniture, food, alcohol. And what is important for businesses is that this fee must be calculated per sale and displayed on receipts if applied. But let's take a closer look. While both retailers online and offline are required to pay this, they can now choose to pay this on behalf of their customers starting from July 1, 2023, very recently. And they don't need to detail this on the receipts. And for those wondering about any leniencies or exceptions, there has been a recent exemption for qualified businesses. That includes small businesses with sales less than $500,000 in the state of Colorado in the previous year. However, timely compliance is essential. Late filings face a penalty of 10% of the fee due with an added 0.5% per month until settled, capped at 18%. And of course, this also accrues interest. So trying to be compliant is not an option, it is a need. Let's shift our focus eastwards. New York State has put forth a proposal. Starting July 1, 2024, there is a potential 25-cent surcharge on online sales delivered within the state boundaries. And on the city level, NYC is considering a 3% surcharge for online purchases delivered within the city. But there is more to consider. New registration requirements may loom for businesses distinct from sales tax ones. And those who pay this fee, they might be staring at a distinct monthly return. This contrasts the Colorado requirements in terms of filing for business owners. While in Colorado, you can file this along with the sales tax returns, New York is proposing to have this as a separate return. So what's driving these potential changes and charges? Consider factors like ballooning population, an insatiable desire for consumer goods, and mounting environmental concerns. Again, who's responsible for collecting this fee? Again, it's the sellers, and it must stand out on receipts. Again, uh, this there is a point to note that this is still a proposal, and it also hinting at some breathing space for exemptions, maybe from other items that have already been exempt or other items that may be considered as daily essentials. Non-compliance, though, is expensive. If the payment is skipped, the proposal contains a heavy penalty, 200% of the fee liability. But let's move back to the center of the country, Minnesota. There's a proposal on the table for a 50-cent retail delivery fee for transactions over $100 starting from July 1, 2024. And this excludes local taxes and other exemptions. So the cost or the overall values of the items should be $100 plus. The scope, though, it is quite broad, covering most item deliveries, excluding a few exemptions like food sales or some specific items listed. Smaller players may have some relief. Retailers with an annual sales of under $1 million might enjoy an exemption. Minnesota's approach, though, here again offers an intriguing contrast from Colorado and New York, showcasing how diverse these policies can be across states, especially exemptions based on business size. Again, it is important to remember this is still a proposal and there's potential for amendments as it nears finalization and based on feedback. So, as we have journeyed through Colorado, New York, and Minnesota, it is evident that while these three states are either implementing or on the brink of enforcing new retail fees, other states might soon join the fray. The ever evolving landscape of fees, surcharges, and compliance requirements can be daunting. This is where partnering with experts like Avalara can give your business the edge, helping you stay updated and, more importantly, ahead of these changes. Let's now dive deep into the additional costs while balancing customer expectations and its associated compliance needs. Rise and returns. As online shopping, as we have seen, has become the norm and is only here to grow, so does the other aspect, returns. A staggering $400 billion worth of products were returned in 2020 and growing. Brands, especially apparel and home improvement, typically face high return rates. About 25% customers returned 5 to 15% of their online purchases, but 62% of customers do expect a swift return and refund process, preferably within a month. And why is this important? If the returns process is smooth, 92% customers are likely to return. And delayed return process, of course, negative customer reviews and experiences. So the key takeaway, facilitating smooth returns can significantly enhance customer loyalty. And retailers are also looking for ways to mitigate these costs overall. While restocking fees can help businesses manage return costs, there's a caveat. They can deter some customers and bring along some tax implications. In Washington, for instance, restocking fees falls under the B&O, business and occupation tax. When charged, the customer's refund is typically the total purchase amount minus the fee. Diving deep, businesses can claim a return and allowance deduction on their excise tax returns, though. And these things also need a good amount of understanding of the compliance, the accounting, and applicability of such fees and taxes. And now we have talked about the what is happening, what has happened, and what is happening. Let's talk about the future. The digital landscape is buzzing with new asset types, enter NFTs or non-fungible tokens, and there have been some things that have been shaping in the tax world associated with them. What are NFTs? We have all heard about Bitcoin or Ethereum, but in those cases, those assets are unique and identical to each other, while NFTs are unique. They have a unique digital signature and are unique in the sense that the ownership is electronically recorded with the proof of authenticity. And NFTs currently are taking the digital art and collector world by storm, allowing content creators to monetize those in new ways. Digital artwork is selling for can sell for millions of dollars. I believe one of them just recently sold for over $60 million, and celebrities have been endorsing them. So NFTs are now moving away from niche blockchain applications to widely discussed mainstream assets. And of course, Washington State has been a trailblazer, issuing an interim guidance statement on July 1, 2022, defining sales tax regulations for NFTs. For those engaging in the NFT marketplace in Washington, be prepared. You might be looking at a 6.5% sales tax and and a small amount of BNO tax as well. Essentially, retailers of NFTs must create sales tax, collect sales tax, and be aware of the BNO tax implications if the sales relate to Washington state. However, as with many novel sectors, exemptions and deductions for NFTs are still in their infancy. We can expect to see more comprehensive guidelines soon. So, as we have seen, understanding the tax intricacies goes beyond compliance. It paves the way for sustained growth in a dynamic marketplace. Let's delve into why this is pivotal and how Avalara can guide you. So, why do retailers need to be tax ready? A significant 98% of companies engage in activities that create nexus, potentially triggering sales tax collection responsibilities. Yet, 94% hold misconceptions about how this nexus is established, or are they responsible for the sales tax collection and then the subsequent licensing and reporting needs. Businesses, on an average, invest about 39 hours monthly managing sales and tax compliance or more. This is quite clear. Being tax ready isn't an option, it is essential. Avalara's platform is adaptable, effortlessly integrating into your systems, always ensuring tax compliance. With AvaTax, dynamic tax determination becomes hassle-free, backed by the constant updating of tax rates and rules. If you want to handle exemption certificates, we have automated it, from alerting customers about handling expiring certificates to recognizing valid tax exemptions via the exemption certificate management offering. Tax filing period. What happens then? Avalara Returns has your back, handling preparation to payment, always aligned with the current rules and forms. And for developers, the entire arsenal of these Avalara functionalities is available through robust APIs, allowing deep customizations to suit unique business needs. Plus, as the tax landscape evolves, our platform evolves. New features and functionalities are introduced regularly, ensuring you're always ahead of the curve. Consider this not just a tool, but a comprehensive ecosystem fortifying your tax readiness. And with Avalara, boundaries fade. Our support spans 190 plus countries, ensuring wherever your business ventures, tax readiness is consistent. And Avalara's adaptability stands out. With 1,200 plus partner integrations, it naturally aligns with the prevalent business systems. Major ERPs like SAP and Oracle, we have got them. E-commerce giants like Shopify and Magento, absolutely. Accounting software like QuickBooks, Zero, definitely. POS systems, we got them. For merchants and retail tech developers across these platforms, Avalara is more than just a service. It's a partner ensuring seamless and compliant operation. So to conclude, in an ever-evolving e-commerce environment, shift adapting to these tax shift defines resilience, growth, and foresight. Avalara's commitment is to navigate this intricate landscape alongside with you. Thank you for being here today and listening in. I'm available to address any questions. Please do share that in the chat and we shall get back to you shortly. Thank you very much.